Welcome everyone, Jeremy from Trading Safely. Thanks again for joining us for another week. We're going to go through all the global markets, particularly the 10 that we offer at our basic subscription service. Euro, gold, the Dow. I'll show you in a sec which markets they are, but we'll probably go for about half an hour today. It's just me, Jeremy King. Sean's going to look after the webinar this week. So looking forward to giving you about half an hour of cutting edge updates on the global markets. Pretty interesting week. Just before we go ahead though, I will just share screen with you quickly. Go ahead. If you wouldn't mind just casting your eye over that disclaimer. So pretty, when I look back at last week, it was a reasonably flat week in all honesty. Really the metals, as we identified last week, were coming into oversold, and so they kind of stabilised. Stocks have a lot of work to do. They're needing to close high, but not doing so. So they're kind of at risk, but obviously the broader trend still hasn't changed, and that's clearly up. Looking at some of the energy markets, definitely a resumption of the major annual bull trend in nat gas, and for oil. We were at pains to say last week that we've had a $10 swing in oil, but it still hasn't altered the monthly trend, and really the yearly uptrend and quarterly uptrends still remain in place. But we'll get to that in due course. What we are really excited about, however, is our move to a new platform for our subscribers. So just if you look in here at the moment, you can see on the left-hand side in this index, there's all the various markets that we cover, from Aussie dollar, copper, corn, euro, pound, gold, oil, nat gas, sugar, a whole bunch of markets, bonds. And we've got yearly charts. For example, if you want to come in and if we check out Apple, for example, you can see Apple's hit the top of a 14-year uptrend channel, so it's got a bit of work to do ahead of it. All the levels are clearly in here, and then you can dig down into the smaller time frame to see what's going on. But not only that, we've got help videos here. So everything that you need to understand is available in this particular channel. So if you want something explained, this is the place to come. So there's no reason that you shouldn't be able to understand everything we're talking about. Importantly, we have this timing reversal channel, which basically tells us which markets week ahead, month ahead, and even quarter ahead are likely to be turning into a corrective mode. And that's really something quite valuable for the people. So for us clients that can focus ahead on the week ahead and just be aware of which markets are turning. So without further ado, we're going to have a quick look at probably the main 10 to 12 markets that we have been, and give you an update on what's happening there. I guess the last thing to note is for the premium clients, they do have access to our trades, which are here, and in this channel we list the trades that we're doing and the stop losses and all the rest of it. So that's a way to keep up to date on that. But sort of working through the markets this week. Let's start with the euro US dollar. Look, the broader trend is clearly still down at the annual, semi-annual, and quarterly level. The trend is down on the euro. The only way that we're going to switch that around is if we get, at the very minimum, a June close above this June bullish pivot here at 1.0. What is it? That level there, 1.0875, I think it is. We do need to be above that at the end of the quarter. So for anyone that's new, that's not seen this before, I'll just quickly explain. So there's, hang on, I'll just remove a couple of studies. when we look at these deviation pivots, or bullish and bearish levels, if you like, there's the weekly in yellow. So essentially that's these yellow ones here. There's an upper level and a lower level. So what we're looking for is where the market closes each week or each month in relation to each of the pivots. So the yellow is weekly, the pink's monthly, the brown bullish is that's the quarterly, and then you've got the semi-annuals here and the yearlies in orange. So what we're saying is, if for a market to keep going up in each of those time frames, like at the end of the week or the end of the month, then the market needs to be closing above those levels. So in instance of the euro at the back of the the bottom of the big sell-off, you could see right at the low there that we failed to, on the last day of the month, we failed to close underneath that pink bearish monthly level, which was a warning that the market was likely to do some sort of reversal, which it did. And in fact, last month we actually closed above that upper monthly level. And so the thing is that can happen in every time frame. So that's how we know what the broader trends are. So in the case of the euro, when we look back in time, the last, we've closed under the yearly bearish pivot in history, and we've closed under the semi-annual and quarterly pivots in history, and that's why the bigger trends are down. So really now, for the euro to reverse that, it needs to be above this 1.0874 at the end of June. So in the short term, we've been at pains to point out that these little pink dots there, what that refers to is the fact that this upper pink bullish level has moved outside or above the quarterly level, and that's a place where markets can reverse. So the euro is still in a place where it can turn down. It narrowly avoided closing under the lower weekly bearish level right on the last trading session. It's pushed up just above it, so it is hanging on to some upward momentum from this monthly close by the smallest of margins. But there still is a valid sell signal in place for next week. I was hoping this week to have seen the euro close back under this where that level is there, 1.0925, and it hasn't. So we just need to be cognizant of that. So despite the fact that it is monthly overbought, we would have liked to have seen some more evidence of it turning down. So hopefully we'll get a failure this week on the euro. So to sum up, the euro bigger trends are still clearly down. When would I change my mind and think that there's more of a correction involved? Well, you'd have to think that closing the month above this 1.1098 is going to warn you that it's not quite ready to go down. What's interesting is when you have a look at the big picture of the euro, when I draw this yearly chart, this is going back to 1968. Well, look what happens at this low here. I draw a channel line there. Okay, you can see that a couple of years ago we broke on a closing basis this major long-term line, and now all we are doing is back testing that trend line. So that's exactly where we are now, back testing that trend line in the big picture. So this is an excellent place for the euro to turn down. In the short term, I'm wrong if we close the month above this 1.1098 level. Conversely, if we start next week and the week ahead, if we have a look at the projected pivots, let's have a look. So next week we're projecting the lower weekly bearish at 1.0875. If we get a weekly close under that, then we're going to be on the way to taking out the monthly bearish at 1.0791 come the end of May, and that would be a bearish outcome for the euro. So conversely, a weekly close above this sort of 1.0991 area might lead us into a test of the upper monthly bullish level coming into the end of May. So look at the pound US dollar. A little bit of a similar story there. The pound US dollar had a major break of a long-term support trend line last year and has essentially just been back testing that major breakdown. That's what this whole move up has been about, from one sort of 120ish up to 130. It's just been a back test of a major long-term breakdown. So we've been pointing out that the pound is going to be an excellent sell because it will want to rejoin the long-term trend, which is pretty clear. Okay, folks, so there it is there. See that big long area that's held for such a long time, and then we snapped it last year. Now we're just backfilling to test it out. Really, you'd need to get like a quarterly close back over, say, 135 for it to even blink about going higher. But the trend is clearly down for the pound, so this rally up here to me is an excellent opportunity to get involved from the sell side. Now, when we look at what it did last week, it's actually closed under that weekly bearish pivot for the week. So there's a few things going on here. This looks like a good place to be selling the pound because this month, these pink dots there tell me that the month-to-quarter relationship is overbought. And not only that, we've now closed under this lower bearish pivot. So that's something for me and our clients to be looking at this week, is entering that short pound, and we'll let you know when. When's a good time. Some of the downside targets for the pound are, we're going to take out this monthly level at 126, and then it opens up 123 and lower. Look at the Aussie dollar. Aussie dollar is also in a very, very precarious position on a longer term basis. And just while that thinks, I'll show you why on the yearly chart. It's always good to take a look at the long-term charts because it gives you perspective. So if I'll in the Aussie here, it has done a similar thing to the euro, in the sense that it has broken a very long-term trend line. Not only has it broken the trend line here in 2016, in this year in 2017, it's gone and back tested that channel line and has failed there. So now when we zoom back in, so this little episode here at the top for the Aussie dollar, at the top there, all we're doing there is back testing this upper channel line. And so now, when you look to the downside here, there's a big space from basically all the way down to 65 and then down to 60. So the Aussie dollar here is really just floundering. It's down at support. If we get to the end of June and we're under 73.16, the Aussie's in trouble. So I'll be looking for a June close under 73.16 to identify that that the next leg down is underway. I know last year's close, if I just put last year's close up, okay, there it is there, 72.04, that's last year's close. Look for a retest of 72.04 if we take out any of these monthly or quarterly bearish levels at the end of the month or the end of the quarter. Doesn't look good for the Aussie. US dollar yen came out of an oversold position that we did alert people to. Going back a few weeks, we identified that it was going to move into oversold, and I'll just show you. So this orange annual bearish pivot, it's basically the one of the key levels to the downside that the yen needed to hold. And so what we pointed out to our subscribers at the time and the clients is that those white dots, they appear when the weekly bearish pivot in yellow moves underneath the weekly, monthly bearish level. You'll notice how most of the time the two, yellow pivots are inside the pink pivots. Well, when the lower yellow pivot moves outside the lower monthly pink pivot, then we get the dots, and that's what tells you when the market can flip around. Now, just the same up here at the top, we said last week, watch out for the yen. We do think it's going higher, and the reason why is because when we look back, we've taken out annual bullish levels, and we've taken out quarterly bullish levels. We did have a quarterly failure here, and that's led to this retest of the major annual support, but we've held that with flying colours. So I think this little correction that we're seeing at the moment is a correction against the trend, and I do think that coming into the end of the month, we will probably see a retest of this little pink square, and what that little pink square is its last month's close. And what you'll realise is for markets to keep going in one direction in one time frame, then they need to be able to hold the closing level from the previous month, because that's sort of the line in the sand. So as we come into the end of the May, we're halfway through it. We've got overstretched in the short run, courtesy of these little white dots, or the relationship between week to month. But now we need to have a look at, well, where was last month's close, and can we close above last month's close? So I'm expecting yen to sort of test somewhere in this range, and then if we hold this 111.52, then the broader trend should be back up. And why do I know the broader trend's back up? Because we've closed over the yearly bullish levels, we've closed over the yearly semi-annual levels. So despite having a quarterly failure, we've still got yearly and semi-annual bullish levels in place. So look for I'll be looking for buying opportunities as we pull back to this 111.527. Apple's interesting, and it's probably a broad indicator of equities overall, in the sense that Apple's actually hit the top of a 14-year trend channel, and I'll show you that on the chart. I'll go to the yearly chart of Apple. Okay, I'll just draw the chart. Yep. So I messed that up. There it is there. Okay, so we have gone above the upper annual bullish pivot in orange, and we have touched the top of that channel. So with that in mind, when we switch back into this point here, we've actually got quite an overbought, well, a potentially overbought market in front of us. And the reason I say that was we've got the brown dots up here. So these brown dots are just a fractal replication of these white dots. So the white dots mean the week to month is overbought. The pink dots means the month to quarter is overbought, and then the brown dots means the quarter to year is overbought. So, i.e., that upper bullish quarterly pivot is outside the yearly pivot. So we're at a major level for Apple. Now the thing with when we get these dots, it doesn't preclude the market from closing higher. It just means that the market needs to close higher. Okay, so like when we look at this instance here, where we had the white dots, we also had pink dots. So it's telling us we're oversold so we're overbought at both time frames. But look towards the end of the month here. just see how far we are up here. So even though we're overbought at the weekly level, we're still closing above the monthly, even though it's overbought. And the same thing can happen here with Apple, but it needs to happen because now we are at a yearly major upper level, which coincides with the top of this channel. So what I'm saying is the market must close over this 156.10 at the end of June. Otherwise, it risks retesting support, which currently lies back down here at 134.54. And also, last year's close, which was around down here, down 115.82. Oh, that's a long, long way ago now. So short term, Apple is coming into a precarious position. It does need to close the quarter above 156.30. Any immediate weakness would be a close under last month's close at 143.65 to open up a test of 136. Moving on to the Dow Jones, bit of a similar story really across the board in most equities, whereby we're coming into what I would classify as potentially short-term overbought, but there is no way that they're long-term overbought. And these things, the market can break out and go much, much higher, in my opinion, when you do look at some of the trends from a longer-term basis. So, for instance, if I show you, I'm just going to pull up a longer-term chart of. Let's have a look at the Dow. Okay, so when we look at the Dow, on a longer term basis has actually back here closed above the channel that it's been in for many years. So that is something that's quite important to understand. And what that effectively means is that it's opening itself up to this new space up here. Okay, so in the short term, you have the low of this quarter, the channel's here at 20,000 basically. So only a close under 20,000 or the top of this channel is going to open up a retest lower when the longer term support's down here around 17,750. So just bear that in mind. 20,000 is sort of a critical level. When we come back into the shorter term, and we look at this framework, okay, there's last year's close, 19,762. It's pretty close to that 20,000 level. So right now, we are seeing monthly overbought again. We've failed to take out that bullish there on a closing basis. We failed last month. This is the third month. So I am on high alert with equities for a bit of a retest lower. It definitely needs to start taking out some weekly bullish levels. You'll notice 2 weeks ago we couldn't take out that upper level. This week again, it's like nearly 3 strikes and you're out, folks. We're on our third month of not being able to take out the bullish, and now this week we are going to be on the third week of not being able to take out the upper weekly bullish. So it definitely needs to take out sort of this. If I look to the week ahead, it needs to take out this level here around 21,004 to keep the chance of taking out this upper monthly bullish level at 21,350. And if it can do that, then the market can break out again. But we're on 3 months in a row, and we're on 3 weeks in a row without a break high, folks. So critical week this week for the Dow. Same story for the S&P 500. Just moving over to the Australian ASX 200. It's made new highs this year. It does need to close above last year's high at the end of the year to keep the market strong. However, there are some signs of a little bit of weakness building in, but a bit like the Dow, you need to keep things in context, because when you look at the longer term chart, which I'll just pull up, when I look at the longer term chart of the ASX 200, what you're going to see is we've broken above this long-term downtrend line. It's been about 8 years, 9 years in fact, and so it's quite normal for a market to close above and then come down and back test the point where the trend line that it broke out of. But that level is actually around 57.20. So I've got no problem with the ASX being bullish while it remains above 57.20. So when I zoom back in here into the short term, there's your 57.20. It actually corresponds with last year's close. We did have a bullish quarterly close here at the end of last week. That led to new highs. I think longer term, ASX is still going to be bullish. Where would I start to reconsider? I would reconsider on a monthly close below essentially last year's close at 57.20. S&P 500, pretty much the same story as the Dow, so I won't spend too much time on that other than to sort of highlight a few key levels. Okay, so really the key levels. So looking at this, it's just like the Dow, right? It's had the same sort of situation where it's failed to take out the last 3 months. So one, there's upper bullish, upper bullish, upper bullish. It needs to get above 24.30 at the end of June. On a weekly basis, it's failed once, twice, 3 times. And this week it's closed under the lower pivot. So there's signs there of weakness already for the S&P. I'll be in the short term, as I mentioned during the week, I think a weekly close under 23.8075 is going to open up a bit of downside with support around the 23 sort of 57 level. 23.8075 is last month's close, so look for a break of that on a daily closing basis. So there's a major level there. This sort of 23.81 to 82. If you get a daily close under that, then I would expect the S&P to drift down here. Conversely, if the end of the month is above 24.30, look for this thing to keep breaking out. Just moving on to gold now. Gold's been saying each week gold is rotating on a longer term basis. The yearly trend, we hit support last year in gold. Let's just have a quick look at the long term chart. Okay, there's the long term chart. So so we had a rotation here. We've come back up. We've tested this high around 1307.8 this year. That's the high of the closing low, so that's a critical level going forward. And right now we've tested already up to this annual bullish at 1264. So I think gold longer term is potentially rotating. When we zoom into the short term, you can see this upper level here that we've tested. That corresponds with this upper level here. And when we look at the pivots, at the low we got oversold. How do I know that? Because let me just go back to the low. Where are we? March. Let's go back to the start of the year. There's the start of the year. Okay, when we got to the low, you can see that we had the pink dots and the white dots, meaning we're oversold at the week to month and month to quarterly level. So despite the fact that gold was still in a downtrend, because when you look at the big picture, see there's the lower bearish level, and gold did not close under that. So that would have made it aggressively go down if it had closed under that. But it did get oversold in the short term. We had this correction up. We had white dots and a pullback, and then white dots from underneath and a move higher. Then we had overbought on the monthly level, and right on the last day we managed to close under. That gave us a sell-off. And we've had the week to month oversold, and that's generated the move higher. Looking into today, we did get this quarterly to monthly, which means overbought at the quarterly level, and then the weekly warning came in with the white dots. That's generated this big move down. I was a little bit bullish at the start of, at the end of the month just gone because of where it closed, and that still may be the case. But in hindsight, I think that was a bit of a bad call. It really did need to close above that upper monthly pivot. So right now with gold, here was the warning that we gave to our clients during the week last week. Watch out if you're short. It can correct up here. What was interesting was that we didn't take out the upper bullish pivot, upper weekly bullish there. So there is a hint of bearishness still there. By the end of May, we would like to be above 1232.3 for this, for it to hold on to any gains. You can see some weakness building in. Like there's last week's close at 1228.4. We actually closed under it at 1227.8. So there is there's a few weak signs still lingering for gold. I think we'll have a little battle around this 1232 level coming into the end of the month. If it can hold 1232, it's going to open up a retest of last month's close at 1269. However, this week, if we fail at this area, it opens up testing 1206 to 1199. If we take out any of those levels on a weekly closing basis, it starts to get very, very scary for gold on the downside. Like it opens up a retest of last year's close at 1152. So I think even though gold is rotating on a longer term basis, as per that quarterly rotation and monthly rotation that we've seen to the upside, there are signs of weakness that are still lingering this week, and I'll be very careful about buying it at the moment. Looking at oil now, I'll have a quick look at the long-term trend to give you a sense of what's going on. Okay, so first of all, let's look at the yearly chart of oil. Okay, so last year we bounced off support at what's that level there? 32.48, and in so doing, we actually closed above the upper bullish pivot. So that leaves oil in a bullish stance. Now, the thing to realize is because we've had so much of movement in oil, it means we've had increased volatility. So when that happens, the distance between these bullish and bearish levels, so the orange upper level and the lower orange level, well, depending on how much the market's moved historically, those pivots will open up. So there's a lot of room. The lower bearish level is 36, the upper bullish level is 67. It's $30. So oil can swing around $30 without changing the annual trend. And the same is true when you zoom into the short term. So look at some of these moves just between the monthly levels. So if I look at that upper monthly bullish and the lower monthly bullish, look at the difference. It's $46 to, it's $8. And similarly, this month, the difference was 52 down to 45. So oil, what I'm trying to say is we've had a move from 54, which we tested last year's close a few times, all the way down to 44, even lower, 43. And the monthly trend has not changed because it's been unable to close under it at the end of the month. So given that, when I look at this long-term chart, it's actually bounced off support. So for me, it's just saying, there's every chance to going up. and it's just testing lower to see if the support is still there. And so, interestingly enough, even though we've come off from 54 down to 44, the monthly trend is still up. And in fact, this week we've reignited the weekly uptrend. So we've closed above last week's bullish weekly pivot, and we've closed above last week's weekly close. So for me, oil looks strong again. It looks like it'll have a crack at 49.19, which is last month's close. If we can take that out at the end of the month, then it's going to open up a retest of 53.89 and then possibly higher again. So this week, if you are long for oil, look for it to take out the monthly close on a weekly basis. Look, I think I'll leave it there, folks, because if I look to these markets to the right, we've got gas, sugar, silver, copper, bonds, corn, wheat, and soybeans. But there's some of the markets that we cover for our premium clients. Once again, if you do want to get involved, we've got all this analysis. We do daily updates on most markets. We've got closing videos. We've got yearly charts. Everything at your fingertips. You can talk to us. All the updates are there, telling you what we think is going on a real-time basis. And if you do want to get involved, don't forget you can come onto our Trading Safely, www.tradingsafely.com.au. There it is there. If you want to get involved, just come and check out our subscriptions page. We've got various levels, and there's some really, really valuable information that we're putting out. And don't forget that you do get a 14-day free trial, and we'd love to have you on board in the community. So I hope that helps. Good luck this week with trading, and look forward to giving you the webinar next week.